If crypto is digital gold, then gold must be analog crypto. As you build your digital portfolio, don't leave your analog portfolio behind. Gold is a timeless asset that offers unique diversification, but there's a better way to own gold than paying storage and management fees. With monetary metals, you can own gold and earn a yield on it paid in more ounces of physical gold. And it's all vaulted and insured on your behalf for free. Their Gold Yield Marketplace platform connects you with opportunities to lease or lend your metal to expertly vetted companies. You choose which opportunities you want to participate in, then sit back and watch your ounces grow every month. The question isn't crypto or gold. The question is how to maximize the value of your assets so you can be better prepared for the future. Earn 2 to 5% on gold, or if you're an accredited investor, you can earn 12% on silver in their latest offer. Go to realvision.com/metals.
Hey everyone, look, sorry, this is the cheesy interruption that you get on YouTube channels, but they're really important. I'd really appreciate it if you just hit the subscribe button. You see, it makes a difference to know how I'm doing, seeing the growth in subscribers, if we're getting the right content. Obviously, comments help as well. But hitting the subscribe button allows me also to book the best guests. It really does make a difference. So if you do enjoy this content, and I know you do because you keep coming back to watch it, just please hit the subscribe button. Sorry again for the cheese, but it is important. I appreciate it so much. Take care.
Hi, I'm Raoul, and welcome to my show, The Journeyman. That's where we travel to that nexus of understanding between macro, crypto, and the exponential age of technology. Now, as you know from this show by now, I like a varied group of people to give me and you guys the input that we need. You see, crowdsourcing your knowledge is a superpower. And I do that by using these videos. But the other hack is on Real Vision itself. That's where there's a community of tens of thousands of people who are sharing trade ideas, research notes, comments, talking to each other, and even in real life meetups. And that superpower, if you think about it, if I've got one idea and I give it to everybody, there's on Real Vision itself, there's several thousand people with one idea. But if those several thousand people, tens of thousands of people, give one idea out each, then we've got tens of thousands of ideas and the network becomes incredibly valuable. Now, one of the things we're doing with this on Real Vision is we've got a trade ideas competition from anybody in Real Vision Plus and higher. Put in your trade idea and the winners get prizes. And it finishes at the end of October. So make sure you get your trade idea. You see, the person leading on the leaderboard right now, his idea is closed, so his performance can't go up. So it's all to play for. So just on the bottom left, you see that kind of little graph icon. Click on that and you can see the trade ideas. But also just put in an idea yourself. Chance your luck against everybody else and then learn from their ideas because everybody's writing up full write-ups. Same in the notes section. Spend your time there because that's when you can get the power of the hive mind. And that's what I try to do on these videos as well. I bring not only presentations for myself to help bring you up to date on my thinking, but I update my own thinking by speaking to amazing people. Now, when you think about crypto, I've spoken to hedge funds, I've spoken to people running the protocols themselves, people building on top of them. But I also find it interesting to talk to VCs. You see, VCs are earlier in the cycle, and you get to understand what's coming in the future, where they're investing their capital. And I think, VCs are often misunderstood. Everyone blames stuff on, VCs are dumping on us. But really, it's important to understand how this ecosystem works and the differences between that and the liquid markets. So I want to bring on two of my favorite people, Mike Dudas and Carl Vogel from Sixth Man Ventures, to talk about what they're looking at and what they're doing. Mike's been on a few times on Real Vision. He's one of my favorite people to talk to. And I think we're going to get a hell of a lot out of this conversation to help us crowdsource our hive mind. Now, if you are on Real Vision watching this and you haven't yet subscribed to Plus and put in your trade ideas and start interacting with all these ideas, you can put comments on them, like them, all sorts of stuff, then I suggest you do so now. And if you haven't joined Real Vision yet, then realvision.com and a whole world will unveil itself to you that's going to help you unfuck your future. Anyway, let's talk to Mike and Carl. Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In the Journeyman, I talk to the smartest people in the world so we can all become smarter together. Mike, Carl, welcome to Real Vision. Mike, welcome back. I think you've been on before. Carl, I'm not sure you have you?
I have not. This is my first time. Excited to chat.
Yeah, I'm delighted to be back.
Yeah, it's good to see you. As ever, before we start off, I just want to get into both of your crypto journeys and how the hell you got to where you are today with Six Man Ventures. And then we'll start talking about what you guys are looking at and all of that kind of stuff. But always, Mike, do you want to kick off with your story?
Yeah, absolutely. So Six Man Ventures, we started in 2021. So we're a little over three and a half years old now. And we're on our second fund, have a couple hundred million in assets under management, over 100 investments in crypto, primarily at the application layer. So it's been a really exciting and prolific time for investing. And the really quick and short of how I got into crypto and crypto investing is I spent the prior decade in FinTech. Started at Google Wallet, then at Braintree Venmo, which was acquired by PayPal. And I started a FinTech company, so a traditional startup, and basically realized, hey, most of what's happening in FinTech is putting lipstick on a pig. You're basically taking these underlying networks that are 40, 50 years old, excruciatingly old technology that's not interoperable, and was very unsatisfied with my career and the progress we were making. So in 2018, was out on paternity leave with our second child and decided, hey, I'm jumping full bore into crypto, which, I'd owned for a number of years prior to that.
Well, so talk me through that quickly. How did you discover Bitcoin or whatever it was?
Yeah. So basically I was at Braintree in 2013 and we met the Coinbase team and also some of the folks at A16Z, including Balaji, who's a friend of yours and was a college classmate of mine. But around that time, I also had read a piece from Chamath about Bitcoin being schmuck insurance. Like, hey, if the world goes to hell, this is digital gold that you could take with you anywhere. It's portable. It's a store of value in the long run. And if the world effectively goes to hell, you should own some of this. It's a global network. It's permissionless. And again, at the same time, I was seeing these permission networks that were very inefficient. So it was attractive to me, Bitcoin, on a number of levels. But for those 5 years from 2013 to 2018, I thought of it primarily as a payments network. It clearly isn't that, for a variety of reasons, block times and fees and whatnot. But piqued my curiosity. And then, like anybody, as price started to go up in 2017, and you see the ICO craze, and I'm looking at my Coinbase balance, I'm like, well, what am I doing in this traditional tech industry? I should jump over to crypto. And of course, that was like the top. So I jumped over right at the top and entered the industry, had very little knowledge other than, again, this passion for payments, traditional finance and FinTech. And so I wasn't prepared to be an investor, wasn't prepared to be a true builder because I'm not an engineer. I couldn't build a protocol. Everything was still at the protocol level and layer at that point. So I decided to start a media business called The Block.
Why would you ever do something so stupid?
You're asking all the right questions. I quickly learned that when you're in a money industry, you'd rather be in the money flow than the information flow. So I ended up selling that business 3 years later and got in the money flow. And that's how we started Six Man Ventures.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future. And Carl, what's your story?
Yeah, so I actually started off my career in hardware. I spent the first 6 years of my career working on nuclear submarines, something radically different.
That's hardware. That's serious hardware.
Or that's hardware. They say hardware is hard for a reason. So I did that for 6 years. And then after business school, went to Google, where I worked in the smart home ecosystem. So Google Nest, again, more of a hardware type role. And then I wanted to move to New York and was looking for I found myself at Google building FinTech products on the side to manage my own portfolio. And I thought, hey, if I'm doing this part-time, I should probably consider doing it full-time. So I was looking for a FinTech role in New York City where I could be a lead product manager with, outsized responsibility. And I found this company, Paxos, after listening to Chad talk on the
Chad's an old friend of mine. Him and Emil are the reason I got into Bitcoin in the beginning. It was Emil and Chad.
Yeah, they are the definition of early into Bitcoin. So I heard Chad talk on a podcast, Invest Like the Best podcast, and I was like, wow, this sounds like a really incredible company. And so I applied, ended up getting a job there. And so I moved to New York, joined Paxos, led tokenization. So I was working on BUSD, I was working on Pax Gold. At the time, I was working as well on the early PayPal stablecoin designs. I wrote the initial PRD, product requirements document for that. Also was doing the blockchain integrations, so helping Paxos think through our future blockchain strategy, which now obviously includes Solana. But at the time, we were looking at different chains and evaluating them. Absolutely loved it. It was a fantastic experience working with the team. And then I had a number of opportunities to go onto the investing side, and actually got a job at an offer at a what I'll say is a traditional venture firm that was looking to hire their Web3 person during that craze of 2021, 2022, where all these traditional firms realized they had no idea how to underwrite crypto. And so I had a couple opportunities there. And, funny enough, was just talking to Mike, say, hey, Mike, what do you think of this opportunity? And Mike's like, if you're going to leave, Paxos, you should join me instead of any of those other firms. And so I met Mike first at Paxos. That's where we worked together, and just had a terrific time. So I joined, it's been about close to 3 years actually at this point. I joined at the start of our second fund.
Yeah. And the truth of it is, Carl's an engineer. I'm not. You are basically, it's like flying blind if you're trying to invest long-term in crypto markets and you don't have strong engineering talent on your team. So we were overjoyed that Carl joined as our partner.
Yeah.
And so you guys at heart were payments people, really, in the end, because of Paxos, everything else.
Yep.
But that's changed. So when you started Sixth Man Ventures, what was your thesis? And by the time you joined, Carl, which was a little bit later, I guess, because it's really interesting how theses change over time, right? As you get new information.
You nailed it. So, I mean, it's almost embarrassing to look back at our first fundraise deck for Fund 1 in 2021. It was basically like the ownership economy, Web3, like taking over the world, DAOs, and NFTs. And like we literally thought that we were going to be like purchasing individual NFTs potentially. So a couple things. One, we're extremely fortunate that sort of the LPs, the investors in our fund, we're very sort of flexible and understanding. I think that's a really great characteristic of frontier tech ecosystems like crypto. You have a lot of people, there's no experts, and everybody's learning. So people were investing in us to kind of learn, hey, where should I look next? So originally, NFTs and Web3 made sense to them. But, it became quickly apparent, as we kind of deployed through 2021, we started seeing, significant opportunities in DeFi and exchange type businesses. And we ended up, finding we invested in Etherscan. So basically we just found that a lot of things that weren't those like NFT native things and weren't ownership economy things turned out to be some of our best investments. So when we raised our second fund,
that's always the case though, is you suddenly look back and go, the best investments were nothing that I thought I was investing in.
It was things that I didn't even know would exist. So like a product called DePIN that was, basically move and earn. And, so encouraging healthy behavior. And then that team is still operating, executing fantastically on that vision. Became our biggest winner. A growth marketing firm called Galaxy, Galxe, just things that, we didn't really know would exist or be part of the original thesis. So that was exciting. Crypto moved so fast that actually when we raised our second fund, some of the slides were actually very similar, but by the time we started deploying about 6 months later, the NFT volumes from the beginning of 2022 to the end of 2022 dropped by like 90%, right? I think at the bottom, OpenSea volume is down 98% from where it was at the peak at the end of 2021, early 2022. So Carl joined right around that time. As we started deploying our second fund, we went from a $7.5 million fund to a $140 million fund. And I'll let Carl talk a little bit about how he helped us sort of refine our thesis and evolve it from that kind of Web3, NFT, DAO ownership economy into a really robust app thesis.
Yeah, I think, it's funny. We get this question a lot when people are, initial conversations with founders. What is the thesis of the fund? And it's very hard to have a unifying thesis when we're investing in everything from AI, crypto to gaming to DePIN. It's hard to have a central unifying thesis. But I'd develop one. It would be that we have generally enough block space, but we need to fill the block space as an industry. I haven't done this analysis, but if you look at the amount of total block space available across all L1s, all L2s, all L3s, to the actual amount of content that's being put on those blocks, I would guess it's much less than 1%. Right. So at the end of the day, I think we have an infrastructure love as an industry, and I think and
that's very typical of early stage, right? We saw it with broadband, we saw it with we've seen it with almost everything. You excess build infrastructure, blow a bunch of people up, and then build the applications on top.
And even the off-chain infrastructure, right? On the decentralized physical infrastructure, like DePIN sector, we have all this latent supply, right? People supplying data and other things into these networks, but you don't have enough demand. So we're definitely overbuilt on both the block space and sort of the physical infrastructure side.
Yeah. It's interesting comparing that to AI, where so far we've been rapidly building out the AI space, but we haven't yet gotten to the point where there's a surplus of GPUs. In fact, we're still in this constrained period. So we're very curious to see, to your point, Raoul, if if AI broadly has that similar trend, or if it's truly just one of these generational technologies that continues to have more demand than supply for a very long time. But I think in crypto, what we've seen is we need to get more applications building on the blockchain. And, as I look back over the past 2.5 years, the things that I think excite me the most is that we've really nailed every single consumer trend that has taken place, or at least a lot of them in the crypto industry, and partnered with one of the best teams in the space. So in NFTs, we are very early investors in Magic Eden, which has been a terrific team. They've been able to do something that a lot of teams can't do, which is to scale cross blockchains. So they're now, one of the biggest Bitcoin ordinal platforms, obviously still very large on Solana, if not the largest. They also scaled to Ethereum and other chains. Extra earn, Mike talked about StepN, but there's some other investments we've made there as well. And I think that's a trend that certainly had a large growth in 2021. But I think over the long term, we're still going to see crypto incentives used to drive health outcomes or other sorts of outcomes. So I think extra earn is here to stay. I don't think it was just a last cycle fad. But I think we really you worked with a terrific team there. On the meme coin side, we have some really exciting investments that are playing out very well. And so I think that's really, taking a step back, I think we've been really focused on this application layer throughout our fund's life cycle. And that's allowed us to get some really terrific outcomes and be part of these leading companies. So that's, at this point, we do everything from dPIN to payments, but everything has a view of how do we better utilize the block space to create better outcomes for users, rather than let's just build more L2s or more types of infrastructure.
Yeah, and we're not the sort of abstract away the blockchain type folks. If we hear that, I wouldn't say we run, but we want to make sure that, like, basically it's essential that that application, utilizes block space, and or, has a token as part of, whether it be the orchestration, value accrual, governance, or, other mechanisms that are critical to the protocol existing. But we're crypto investors. We're not, investing in, these obfuscated things.
So we'll come on to more into the different areas and what's exciting you. But I want to talk a bit more broadly firstly, do you guys invest in equity and tokens, or you're more interested in the token side? Because there's a lot of interesting dynamics. I don't want to dig in on the VC industry before we go into what you guys are seeing in the industry overall.
Yeah. So generally, we invest at an early enough stage in most companies where we have exposure to both. So a standard safe with a token warrant, I'd say, is the most common deal structure. We do invest in equity-only businesses, businesses that will, like, for example, stablecoin businesses that will never basically have a token if it's a centralized stablecoin issuer. We do those investments, but we obviously see the power of tokens. And so that's certainly a lens through which we look at deals. Is there a token that can be useful here to help decentralize the infrastructure and provide additional layers of utility?
So I've always been interested in this is when you do have an equity and token mix, do investors ever get to realize the equity or ever care about the equity? Because the token is obviously liquid,
Yeah, it's a great question.
earlier stage. And I still think there's confusion. We've been looking at exponential age asset management about creating various kind of growth VC. And we've been looking at this equity and token thing saying, when does the equity make sense and when does the token make sense? Because I think a lot of people end up with equity that they'll never, ever realize, but they've realized the token a long time prior.
Yeah. So I think you're going to see, I think to date, it's been hard to see examples where basically entities that issued tokens accrued significant equity value that was realized. Moving forward, I think that will change, and you actually will see more entities that accrue value to both the equity and to the token. Examples, DePin is a fantastic example of that, where you could have basically a token that could accrue, let's say, a portion of the fees generated from a network like HiveMapper or Helium, but then some other portion of the fees or revenue, goes to, call it, the equity-based labs entity, which may be, by the way, just one entity that sits on top of that protocol. So you have this mapping protocol. HiveMapper may own an entity that
like a foundation and a labs.
Exactly, a for-profit. But by the way, if these things get big enough and ubiquitous enough, there could be other for-profit entities that want to operate on top of the HiveMapper protocol. I'm not saying it's happening today at real scale, but I do see a future where that could happen. So when we evaluate deals today, we basically say, hey, we think this entity is worth this amount. And typically at the earliest stages, we're doing something like 1-to-1 tokens. So you'll put a valuation, a deal of $20 million and say, basically that entitles us to, equity at 20 million and token at 20 million. And we're not sure exactly how value will accrue to each of those.
But do you tend to think, even though you're offered token warrants plus equity, in your mind, you're probably thinking it's tokens plus I've got an option in the equity in case it's valuable?
I think it depends on the type of product. So, some of these decentralized exchanges we invest in, we fully expect that almost all the value will come from the token, and that's actually by design. In some of these infrastructure projects that we do invest in, the equity should essentially fade away, and that the community increases ownership over time in the form of a token, and that's the way we underwrite the deal. Then there's other deals like centralized exchanges. We, not to talk my own book, but just as an example that we're the most familiar with, we led the Series A of Cube Exchange, and they announced this past week at Breakpoint that they're decentralizing a portion of their net settlement infrastructure that's going to be governed by a token, right, and a decentralized set of validators. So there you still have an entity that has off-chain order books that's creating a lot of value for users, brand equity, et cetera, but the actual governance of the platform, of the settlement of assets on the platform, will be decentralized. And of course, the vision there is that this isn't just something of Cube, but that any client can go ahead and build on this architecture over time. So that's another example that comes to mind. When we were underwriting Cube, we fully expected that there would be multiple, large amounts of value accrued to the equity, as well as new forms to the token.
One of the other things that I've noticed from the space is there's almost excess competition at the early stage VC. There's approximately zero in growth now that Tiger and all the others have gone. A16Z might follow through. And then there's Dan Tapiero late stage, and it's a really kind of lumpy ecosystem. So how does it work for you guys when you find somebody in your portfolio that's doing really well And now they're trying to get to growth stage funding. It's outside of your checkbook size or out of your mandate. How does the market deal with that?
Yeah, so it's been lumpy for the past 6 to 9 months because there simply has been no growth appetite. But I actually believe that there's more, call it Series A, Series B money in the market than people realize. Like, Polychain, Paradigm, Dragonfly, A16Z, they're huge funds. Those crossover funds were almost too much. I mean, you had deals like OpenSea getting done at whatever, 15 billion. That never should have happened. I won't name others because but deals that were getting done, 8, 10 billion, that now you see, equity in these deals trading at 25% of where those rounds were done. What I think you're seeing, there's actually not a lack of growth capital anymore. It's just that the valuations are becoming much more prudent. And, you're just not seeing them kind of throw money willy-nilly, into kind of like pre-TGE deals or equity deals with no clear outcomes. But, I saw a stat yesterday that Paradigm and A16Z jointly have deployed something like $3.2 billion, I think, this year. Deals like Monad, Eigenlayer, big growth deals. It's just that there's a very select group of winners, and it's not as kind of crazy and euphoric as it was in that 2021, 22 period when things got a bit out of hand.
Yeah, the other thing I noticed about the structure of the kind of crypto investing markets is there is a mismatch between the amount of early capital and then the secondary market capital, right? I'm a crypto fund of hedge funds in Xpan. There's only 10 billion in that space. Entire capital, no, less. 7 billion entire capital under management if you take out their VC books of Polychain and all of that lot. And so what you're seeing a lot of is as the early stage VCs get to exit some of their things, it creates the drop. It actually does create a huge opportunity for the secondary guys. If it's a good project and it's just got discounted in price below fair value, it becomes very interesting. So I still think that maybe the secondary markets may offer a higher return over time, just because of this weird structure of not enough capital in the secondary markets.
Yeah, I actually this past week met my first fund manager building a fund specifically focused on this. I think it's going to be a $20 million fund, only looking at secondaries and locked token sales from, let's say, venture funds that want to exit their, get some DPI. And so like, hey, we're going to take discount for the locked token portion. He's specifically going to be focused on buying these types of assets. So I think you're right that there has been a large amount of capital in early stage deals. And so a lot of prices have been distorted. And I think some fund managers are starting to see there's perhaps less tapped areas, such as you highlighted.
Yeah, because liquid markets have been definitely under allocated to over time. There's plenty of money in liquid markets, there's mainly retail, plus a few trading shops. I mean, that's it. There's very little professional capital in comparison.
And by the way, that liquid, call it retail, and what you're seeing, if you just look on any given day at the top 30 coins by volume, you're going to see mainly L1s, the top L2s, and mostly meme coins, and then like maybe one or two category leaders like a Filecoin or a BitTense or an AI. There really aren't a lot of what you would call like the VC-backed or substantial projects. Liquidity in them are exceedingly low. So to your point, I think it's going to be really interesting to see how venture investors do actually generate DPI. And it will be reliant, I think, on some of these, like we were just talking about DePIN or some of these DeFi brands attracting real users and consumers in the millions. And then those folks actually like finding value in the tokens and seeing them appreciate and telling their friends about them and the way that they told people about NFTs and ICOs in past cycles. That hasn't happened yet.
So let's talk about this giant city of block space that we've built. And we now need to fill all this office space and create coffee shops and accommodation and all of the things that make it vibrant. Stablecoins have been one big area, obviously. They've taken up a lot of block space. But what are the other big things that move the dial? I mean, there's some things are smaller, but where do you see opportunities for real scale of blockchain use? And then we can dig into more specific, smaller things that interest you.
Yeah, I think where we spend most of our time, I'll just highlight two categories, would be DePIN and consumer. I think DePIN is one of the most obvious investment areas, and for builders, design spaces to be focusing on right now in crypto. I think for some people it's really hard to understand DePIN. The way I reconcile it is it's the analogy of the restaurant. What happened to the restaurant industry by the franchise model is now happening with physical infrastructure. So before, if you were a restaurant and you wanted to scale globally, let's say from 2 stores to 5 to now like 100, well, you need to build up a massive balance sheet. You need to understand the local rules, requirements, the best street corner in each type of town you wanted to go into and scale. You need to hire local employees. And so now, like, actually growing a business that works is extremely challenging. Versus the franchise model, well, now you allow others to inject their own risk capital, who understand the local regions, who understand how to maintain and operate the infrastructure. And what you do is you give them a set of APIs and in some cases hardware that you sell to them. And then likewise, they return you back money in the same way that a franchise does to the protocol or to the entity. And so I think just how franchises totally revolutionized restaurants, we're seeing it happen in infrastructure today. So I think there's a number of successful projects out there, such as Helium and Hivemapper and some of these RTK spaces. Basically, how do we use...
just want to stop you on that one, because everybody wheels out Hivemapper and Helium, and beyond that, it gets really thin on the ground. But you guys are early stage, so you're seeing the interesting stuff. And that's always interesting for me, why I love speaking to people, early stage VC, because you get a pre-look. It doesn't mean you get them all right, but you get a pre-look of the trends and where things really could be happening. So what do you see there outside of the kind of household names that we know already?
Yeah, I'll give one area that I personally find really interesting. And, if you believe in a world where there's going to be more automation, more self-driving over time, I think everyone can foresee that world. Well, one of the challenges today is that most traditional GPS sensors, GNSS sensors, have high degrees of inaccuracy, within 1 meter to, in some cases, 3 meters. And that's due to atmospheric distortion. And this is a traditional Web 2 technology called RTK. It's a way where you basically have base stations on the ground that, because they're in a fixed space, they can calculate an atmospheric, correction factor, such that if you have a GPS sensor, you know where you are based on these 3, satellites, but then you get this 4th upload of the distortion that the atmosphere has. You multiply, matrix multiply it out, and all of a sudden, now you can get within 1 to 3 centimeters. So literally 10x to 100x improvements in location, all because you have this base station on the ground that's relatively cheap to run. We've seen a number of companies building out these types of RTK networks. And one of them out there is.
And what does that get used for? Drones, or
yes,
what is the
used for? I mean, things as fun in retail as robotic lawnmowers. Believe it or not, is one of the largest.
Yeah,
RTK.
You guys just got back from Singapore. People have got robots in restaurants in Singapore.
Robots in restaurants. I mean, because here's the thing: if you're trying to design a self-driving system, you need to have some basis of where you're starting at, and then you use image recognition, LiDAR, and other technologies to get more specific in where you are. And so if you can start, instead of this 1 to 3 meter space, start with 1 to 3 centimeters, well, now your sensors, you can reduce your sensor requirements because you have better information in where you actually are in physical space, right? So robots on the ground, and drones, self-driving cars, all of these are used or can benefit from improved atmospheric correction, right? And understanding where they are in space. So that's a really interesting one that Mike and I spent a lot of time on.
I'll give one other category, which is, decentralized virtual infrastructure networks. It's like a subsector of DePIN or something analogous to it. But basically that would be like these decentralized compute networks. So you have folks who have sort of like, hey, I've got, NVIDIA machines that are underutilized. Why don't I contribute them into a network? Because people can't get access to them. So we've invested in a company called a protocol called IO.net in this space. There are others. There's also a DVIN called Grass Protocol that basically gets access to residential computers and effectively scrapes the web in a way that a industrial company could not, because they'd actually be blocked at sort of the ISP or level from doing that type of scraping. So there's a number of different networks. And by the way, like, for example, Backgrass Protocol has millions of people, more than 2 million people who have downloaded. It's not an investment of ours. It's just an amazing stat. More than 2 million people who have downloaded the software and are allowing, their computers to be scraped. That information is then scrubbed, cleaned, and presented up to companies that have demand for data that they can't acquire themselves. So there's a number of models, and we see a new one literally every day. Decentralized weather data, decentralized energy sensors. We invest in a company called Dawn Wireless that Carl can kind of talk you through.
Yeah, I just want to ask also about the token economics of a DePIN network, right? So I have this sensor for helping the GPS map. I'm getting paid in tokens for it. So I just set it up and I'm getting paid in tokens. I now want to realize the money out of the tokens. What is the demand side of the equation? And does the token exhibit network effects, or is it going to be more stable in price than others? Because I think there's something slightly different about the token economics of an ecosystem like this.
Yeah. I think what we see is a lot of teams are using what's called burn mint equilibrium. And that's a fancy way of saying, if you're buying data from this network, whether it's computer images from a car, whether it's atmospheric correction factors, whether it's you're buying gigabit internet on a monthly basis, you should pay the same price, right? Like, you can't have a world where 1 month, you can't rely on this as a source of infrastructure. If 1 month you're paying $10 and next you're paying $100. So I think we've seen teams pretty much uniformly move towards this model, and that provides a level of stability.
And how does that work exactly? The customer pays in dollars, that gets burnt, and the entire supply gets reduced forever, or just taken off into a vault? How does that?
Yeah, I mean, there's different sub mechanisms that teams use, but by and large, they'll just they'll basically do an open market buy, is probably the easier way to describe it. And therefore, open market buy of the amount that the customer pays, burn the tokens, and then how much they burn will determine the emissions on the backside when they issue new tokens in the next block.
Right.
So I think the demand side's been the challenge for most of these teams, to be just completely candid. When we underwrite DePIN deals, one of the things we look for is, do they have proven demand? And in the deals that we've done, we've invested in let's say the category leaders in generating demand, because we know at the end of the day, that's the most important part of this network, is not can you build it. In fact, we've, as an industry, pretty repeatedly created the supply side and built out networks much larger than existed in Web 2.
Well, because when money is the first outcome, literally the first outcome, supply is almost infinite, because everybody wants money first.
Exactly.
As opposed to building a business. Why bother when you can just sell the token?
Yeah, exactly. So I think it's going to take time, but we do see some very big bright spots and upcoming announcements that I think will really energize a lot of these DePIN communities.
So, Mike, what are you seeing at consumer level that you're seeing that's interesting?
Yeah, so at the highest level, what I would say is that it feels as if, and I would say just empirically based on the numbers, we're at a smaller number of market participants and really dollar participation in consumer crypto, however you want to define it, the sort of the totality of, NFTs, social apps, and gaming, than we were 2 years ago, right? Or 2.5 years ago. So you really have, and we all know this anecdotally, but if you talk to enough people, it becomes a pattern. There really aren't a lot of new folks who have entered into crypto during that 2-year period. So it's been mainly, kind of people leaving and then the diehards remaining. And so what that means is, you have resilient people. They're often, they're kind of like power users and whales. They clearly have like a high risk tolerance to have stuck around. And so the majority of applications that we're seeing getting significant usage, and by the way, this could be across consumer DeFi, it could be across consumer gaming, or it could be across consumer apps, things like, the new apps, the mini games on the Ton network, or, sort of the biggest category, I guess, of the last 9 to 12 months, what you would call meme coins, is that consumer behavior right now is still primarily speculative. Okay. So, we're fortunate enough to have invested in the sort of what I would call a foundational kind of company in the space called Pump.Fun. Basically, they've reduced the cost of launching a coin to zero, and they've created an incredible social experience, live streaming and chat around that, and have an incredible roadmap to create what we think will be a category-defining mainstream app, over the next 5 to 10 years, which is a social app, that has sort of money embedded in how people interact with one another. So thematically, the last couple years, it's been largely kind of speculation. But, with Pump, with, Farcaster, and with others, we do start to see kind of like social interactions beginning to emerge. And that being said, I wouldn't say that we've drawn new people into it. So for us as a firm, we really are investing still in basically things that rely around money more than things that, consumer things that tie to, call it like creator distribution and then just things of that nature. Because our belief is that we're still probably 12 months plus out from mainstream folks coming back in, and we're early stage investors.
Memes and celebrity memes and other stuff feels like that is the experiment that you and I have talked about in the past, is that the social token idea, the creator economy. It feels that is an iteration and experimentation step, and when you do something this scale that Pump.Fun have done, you really battle test a lot of ideas to see what works and how do you build a token economy. Can Iggy Azalea manage to do it or not? It's fascinating.
Absolutely. I mean, and frankly, they've done an incredible service to Solana at large. Battle tested the network. It's not falling apart. It hasn't, over the past year, in the way that, CryptoKitties years ago, crashed Ethereum, or even Solana had significant downtime in the past when there were, NFT drops. And in fact, Pump is a massive, massive user of Metaplex, which is fundamental infrastructure that was spun out of Solana Labs that's, appreciating in value and usage. So, and they use, Helios, an RPC and infrastructure provider on Solana. So they're really, really hardening the infrastructure to support all the use cases on the chain.
One of the things that I've noticed in the consumer end is we are starting to accept that gambling is a core use case for things that go up and down. And, we've seen Polymarket, we've seen Pump.Fun, we've seen just generally crypto markets, because there is a societal issue with generally young people not having enough assets and not being able to get enough assets. So I'm also thinking through, as AI starts replacing jobs or changing the structure of work, it feels like the speculative economy is actually going to grow and not shrink.
Yeah, it seems like it's going to be one of the only ways to, achieve the American dream. It feels increasingly out of reach for most people, and being able to nail 100x on a coin might, to a lot of people, seems like one of the only ways they can achieve it. So I think you're totally right. I mean, I think gambling industry, if you look at the metrics, has grown maybe even 2x over the past 10 years, if not more. So really incredible growth. I think one of the things about crypto that we're really excited about on the social speculation side is that it's fundamentally social. I think when you look at experiences like...
It's a human-to-human experience.
Exactly. It's a shared experience. If you look at...
Because don't forget, also, sorry to interrupt, Carl, but if you think about once AI gets the next step from here, it's going to beat us all at markets. So that game that we play, over. So what is the game that we play? Sports betting, that's a human-to-human thing, or betting on fucking raindrops or meme coin. Nobody cares, right? It's just a way of social bonding, commonality of purpose, or tribalism, and all the kind of stuff that humans love doing. But I think markets kind of dies away over time. Crypto markets less so, just by their very nature. But
yeah, and I think it depends on the type of market. I mean, as I look at Polymarket, I'd really define it as what I'll call an outcome-driven or event-driven market, where there's fundamentally an oracle that settles a real-world event right over time. I think Pump.Fun, I describe that more as an attention market, right? And I think as you would expect, as certain memes come into vogue, they increase in attention. And likewise, as they go out of vogue, you can expect they decrease in attention. I think there's another category of what I call opinion markets that I'm really excited about. And these are things like, for example, markets that can recursively settle themselves. So if I asked you, hey, if I put up a poll, what's the most popular pizza place in New York, as an example, there are, what is the right answer? Well, you can't settle that with there's no actual right answer. It's the market determines based on financial allocation, what is the right answer. And because these recursive themselves settle themselves in recursive, you can have infinite content in a way that you could not do if you're actually trying to build oracles to settle real events in the case like Polymarket. So I think opinion markets are going to be even larger.
Super interesting. Just on the opinion markets, have you ever read the book Super Forecasting?
I haven't read that book, but the idea goes back 100 years or maybe 180 years to Keats. He had introduced this with, the 100 photos of beauty contestants. And the goal was determine what you think
everybody else wants.
Everyone thinks is the most.
What they figured out in the book Super Forecasting is you can have a group of experts and they will be beaten by a group of highly motivated, broad-based experts, not experts in that particular topic.
Yep.
So whether it's looking at, let's say, hurricane prevalency in wherever at whatever dates, this group of people self-educated because they were motivated by economics to do it, and they always beat the experts. And so I think the opinion markets are much more powerful in many, many things. Think about product launching. Think about what that is for polling, or what companies do when they go to market and try and ask questions of market. Well, there's a very powerful way of getting better signal.
Yep, exactly. So I think, again, it's infinite content. So if I look at what's a team that can build $1 billion business with 5 people, it's something like an opinion market. The other thing is you can have really fast capital turnover. Think about Polymarket today, a lot of it is driven towards the election. And by the way, I think actually Polymarket's going to be successful for a long time. I'm not a Polymarket bear. But at the end of the day, most of your market, capital is not turning over that much. It's kind of a lot of people holding on until the election. Well, if you could have daily polls and daily things that are coming out, and you take a spread on the markets being settled, well, all of a sudden your revenue is going to go up like crazy. So I think Polymarket was a great, kind of like how OpenSea was the first level of NFTs, the first iteration NFT platforms, and then we saw many derivatives from that were extended and introduced new ideas. I think we're going to see the same thing with opinion markets. Can we have markets
individual based bets with an oracle? So if you and I have a bet about something, Carl, we can just, we can essentially put it on the blockchain. It automatically resolves. And so that becomes those, mates betting markets, that settling of a fight over Twitter, whatever it is. Are we seeing that yet?
I think the hard part is that it depends on the type of market, because then if it's you versus me, then it's how do you settle it if it's just whoever puts some more capital? You would need some sort of social network to determine.
Well, I can bet on your bet versus my bet. That's when it gets interesting, right? Raoul and Carl have a bet on something, right? And if it's really interesting to other people, it's like, fuck yeah, I'm going to back Carl on this one because he's much smarter than Raoul.
Exactly.
That kind of idea.
Exactly. So I think that absolutely will exist. I think there's also ways where how to use capital formation to influence outcomes. I won't say the name of the market, but I met this really interesting market idea where basically it's pooling capital to get people to do certain things. And fundamentally, that I imagine going extremely viral, that idea and that concept. So we're really excited about.
Yeah, it's the old question, would you do X for $1 million? Those markets can't exist at this point.
Yeah, and people might be willing to pay to actually see somebody perform that outcome.
And this is, I'm loving this conversation because we're not talking about the normal kind of stuff. What I'm really interested in, we talked a little bit about AIs. Society and the economic system is going to restructure in ways we don't yet understand. And I just think there's something amongst this kind of stuff.
Yeah.
Yeah. I'm not
as a unified purpose.
Earlier we were like, I don't see a world where you're going to have to, win 100x on, your meme coin bets to live.
No, not to live.
I think that most people are underestimating, Sam Altman came out with the intelligence age a couple days ago, and everybody reposted it, and I think I did, because I'm a lemming. But the point being, within a couple of years, you're going to have that personal assistant, literally all the world's information in your hand. Somebody like me who's 45 and still has yet to learn a foreign language, despite trying a number of times, and has yet to learn how to code with any level of proficiency, will literally be able to speak in any language and be able to code. We can't imagine how that changes the world. And every kid, who's call it, under 10 today is going to experience that, or most will have a chance to experience that world. It's remarkable.
And one of the other things I think, might be interesting for your future thesis is, as it goes, is I've been thinking through what I get to is an economic singularity where everything starts falling apart. I won't go into the whole thesis, but one of the parts of this is very soon, like within next year, anything I see built, let's say Magic Eden, company you're invested in, I can give it to my AI and it will build it. Now, I may not get the customers, but it will give me the marketing plan and how to do it, right? So the velocity of business creation and destruction is mind-blowing, and AI will build AI businesses. I already think that's happening at OpenAI itself. And that, when I get to that, this is not the velocity that normal capital markets can deal with, because creation destruction is too fast, but it's perfectly made for crypto. It is what ICO's tested. It's what meme coins are testing now. It there truly becomes how long can that new product hold attention before somebody disrupts it? So I just think there's a very big thing coming.
Yeah. And I think too, what I find really exciting about AI is it's going to necessitate greater degrees of entrepreneurship, right? I think, gone are the days of, 20 years ago, hey, 40 years ago, you worked the same job for 40 years or 30 years, you have your big, plaques you get every 5 years. Those days are already mostly behind us. I think as you get into now, anybody can build anything. It's going to be even more people are going to be required to be entrepreneurs by default in order to have, let's say, outsized outcomes. And so you'll see a lot more entrepreneurship. And I think crypto is obviously great for entrepreneurs from a capital formation perspective.
In fact, it won't even require, venture capital in many cases, and people will be able to pick and choose. I talked to a founder today who is, I think, 23 years old, is on his 7th project. 6 of them, not all of them are crypto. The last 2 have been, but he bootstrapped the previous 6. A couple of them were profitable. He's doing well, and now he finally wants to quote unquote, go big. But just the way that people think about resourcing is completely changing. Sam Lesson's actually talked a lot about this, the solopreneur who basically just needs $10,000 to $25,000 to start and create, multi-million-dollar businesses.
Yeah, I can't remember. There's a bunch of these VC people who've got a bet that there's going to be $1 billion company by one person made. I think it's the next 2 years or something stupid, 2 or 3 years.
And frankly, like they already do exist. You become the head of AI at Google, you leave, you basically pretend to start an AI company outside, and then Microsoft buys you for $2.5 billion. So
that is the game. Question I want to ask you, Mike, just as I don't know if you're invested in, I don't think you are. What do you think? Do you think Yuga's going to get this right now? Don't forget, they've been if you step back, they had the meme coin.
Yeah.
They had the cultural ecosystem. They pioneered the NFT market. They started with the gaming thing. That they kind of get where the metaverse is going to go, whether that's gaming now, wherever. It drifted. They brought in a management team. The core groups come back. Feels like something's going on. I just want to pick your brains on it.
Yeah. So I think there's 2 separate questions, which is one, will they ever realize, call it the enterprise value ascribed to them in a round at $4 billion? I don't know. That's really, really hard stuff. And it was a over euphoric phase. Will they ever make the people who spent, hundreds of $1 million for, NFTs at the peak happy? No, probably not. But again, those people, were clearly speculating at that point. Paying $1,000 in gas fees to buy other side land plots. So, I think those things are going to be difficult, meaning, to hit the valuation milestones and make people who paid those prices, happy with those purchases. But do I think that Garga is an authentic, driven, like caring, and I don't know him deeply personally. I've met him in passing a couple of times, but do I think he cares and really wants to create something impressive? Yes. But I think people's vision of I don't believe that it's going to be a Roblox or, epic Fortnite quality metaverse. I think that kind of ship has sailed, just by virtue of, the brand is a few years past where it was. And, you have kind of one moment in time, I believe, at almost any company that's consumer facing to be really dynamic. And if you miss that moment, it's tremendously difficult in this digital age to recover.
Although I do think, obviously Wiley's been out ill as well, but, I think if those guys get together, there's something about the Bored Ape Yacht Club itself, the clubhouse in Miami, the idea of creating a Soho house of roving people that has value, I think is still there. I think that part.
That seems right to me. And CryptoPunks themselves, I mean, I still own my CryptoPunk. It's not a financial investment. It's an investment. It's a me just being part of a global group of people who I enjoy. So yeah, I think that's more likely. That's what these communities really are. They're just groups of people,
social identifiers,
want to associate with one another. And I think we got, a lot of us got carried away, thinking that, we needed to create kind of venture scale businesses, and scaffolding and visions around that. And really the only one that, seems to be working right now is Pudgy Penguins, in terms of delivery of vision relative to the amount of capital raised. And I'm talking about just out of the pure projects that started as profile pick PFP projects. They've done a really good job, but still, even for them to realize, significant, call it value accrual and realization, they're launching an L2. So effectively launching infrastructure that other folks can build on. It's just really hard to create venture scale businesses out of communities that are naturally constrained at 10,000 or whatever the number is. And again, Pudgy's done a good job of expanding beyond that with Instagram and other things. But by the way, that's why we've been so much more bullish on investing in sort of meme coin infrastructure and in that area generally, because those are almost infinitely divisible, right? You look at meme coins and hundreds of thousands or millions of people can hold them and make that their identity.
Question I want to ask, because you mentioned it before, where are STEPN? Because there's clearly a brilliant idea there somewhere that's going to become big.
Yeah, so they've now launched multiple products. They launched a marketplace, NFT marketplace. They launched a wallet, and they recently relaunched the actual core STEPN app with new NFTs at a more accessible price point with team elements. And they have the partnerships with brands that they've been talking about for a number of years, where you actually get real world tangible benefits from the tokens that you earn, which was always the original business model. What happened, it was really hard. When we got pitched Move and Earn in 2021, it was hard to even imagine that within a couple months of the token launching, the fully diluted valuation at one point was I think higher than Reebok. I mean, it was 15 billion or something. Just a speculative mania that you can't control. These are permissionless networks, and the token traded on exchanges, centralized and decentralized. So anyway, that definitely led to confusion, and I think in a short-term period when NFTs were going down in price, a perception that the project had run away and failed, but that absolutely isn't the case. The team is still extremely focused. As I said, just re-released a new version of the game. Our partner Serge actually still uses STEPN daily as part of his routine.
Magic Eden.
Yeah, so Magic Eden's
where are they going? Again, NFTs in its first iteration, great. I'm a huge NFT collector. I have my punk and my ape, all of that stuff. But NFTs are a very, very useful technology. Magic Eden to be big needs to exploit the technology in a broader sense. What do you think they're up to? Where are they going?
Yeah. So, basically you could see that they've so one, as Carl said, they basically work across virtually every blockchain now where there's volume. They've released their own wallet, and that's, a huge focus. The wallet today is the primary entry point to on-chain activity for virtually everybody. And I think that's probably not going to change. So clearly they're moving towards, hey, we want to be a gateway for more than just your NFT purchases. And the first foray into that was, as Carl mentioned, they now support Bitcoin, and they supported their first fungible protocol, which are runes on Bitcoin, so fungible tokens. So, that's not to say that they're going to become, an exchange, but the point is they're expanding more broadly and supporting more asset types, both in the wallet and
it's something I've talked about for a long time. It's just somebody has to get ticketing sorted out.
Oh, unquestionably.
And that's a perfect platform. Magic Eden, Solana's fast enough. It's like there's a marriage made in heaven there for ticketing that gives it secondary value after the event because it's a moment. All of the efficiencies, the capital efficiencies, getting rid of the ticket scalps, the whole lot is up for grabs. There's a few people building, but
look, we've been pitched so many ideas in that space. And by the way, I've been pitched, I was there when StubHub was getting started and SeatGeek, very early days. Look, I think Live Nation just got sued. There's just a bunch of real systemic challenges around the high value ticketing market, certainly in the US, but really globally. I think that will get worked through, in the way that Spotify was sort of able to sort of pierce through the music industry and make it a little more accessible to folks and change the model. We're hopeful and optimistic over the next decade that's going to happen in ticketing. I don't know if it'll happen on chain, but to your point, it's absolutely something that should happen. And, tickets as collectibles and mementos is something that
I've got a drawer full of concert tickets I've had since the age of 11. I've got my Live Aid tickets framed on my wall because I was at Live Aid. These things have value, right? Because they are just cultural bits of attention that remain persistent over time. They always have value.
The other part of that is proof of attendance.
Yeah.
In the sense of, if I attend, a certain number of sports games by a particular team, you can imagine restaurants in that local area looking to target and give incentive to those types of fans. And right now, there's zero way to do that. In fact,
and clothing companies and all of that. There's so much.
It's one of the most when you walk through the thesis, it's one of the most obvious use cases of crypto where there's benefits on layers all the way down. There's just high amounts of regulatory barriers and other just long-term financial contract lock-ins that these venues have, that you need incredible amounts of capital to be able to guarantee the pre-purchases for some of these types of venues and artists. So I think they'll get resolved, but it's certainly one of the harder areas, and I don't think it's going to happen overnight.
Yeah, I joined the board of Divan. I don't know if you saw them at Breakpoint.
I'm a huge fan. I love it.
Such a cool idea, right? Because I get rewarded by opening a bottle of wine. What's not to love? And incredible. I mean, it's just an incredible thing. Ignore the bigger vision, but you're a wine producer. You have no idea who drinks your wine and when and where. Zero clue. Because it's a 10-year gap between shifting it out of your warehouse to distributors to being flown around the world. And it's such a high value business. It's a really interesting idea.
It's absolutely. So that's one that we are looking at, and a use case that we're really interested in. In fact, another one is tokenized whiskey. You may have seen Baxis. Carl's an angel investor in that business. So I think tokenized collectibles they're redeemable, but you don't have to redeem them, meaning anybody anywhere can own them. But if at some point I actually want to consume it, I just redeem, my NFT for that bottle. I think that's a really, really valuable use case that makes these markets that have historically just been purely collector, stick it in my cellar and nobody sees it again, into really valuable ones. And what you just described with Devin, I think, is even more powerful, which is allowing for a direct relationship between a producer and a consumer, an industry where that's absolutely never been possible. It's really exciting. And as I think, it'll take probably 4 or 5 years for that to work itself out into the supply chain, because you actually need to, it needs to happen at the production layer. But really, really exciting.
Carl, it's probably one for you, actually. I just saw you guys were involved in the round for Helios.
Yep.
This one of the most entertaining people on Twitter, but also shockingly good at what he's doing. What are they doing? I never really understand, because it's all a bit too tech for me, but clearly that business is involved really at the core of what's happening in Solana.
Yeah. I mean, the simplest way I would describe it is they make it easy for developers to build performant applications on Solana. So that's everything from the basic RPC layer, in which they're one of the highest performers in terms of throughput.
When you say RPC, what do you mean?
Oh, so basically, if you're an app and you want to put something on the blockchain, normally you don't want to actually do that yourself. It's easier to have a service provider that's able to get your transactions and actually publish them and put them on the block. It's like a very complicated thing to be able to do. And if you're an app developer, you don't want to be dealing with that. So you have an RPC partner where you specify, hey, this user wants to perform this transaction. Here's the signature information. And the RPC will actually be responsible for forwarding that to the blockchain. I guess to the block producers who then put it on chain. So basically they are, I think Mert's just general awareness and constant evangelism of Solana. I think every app developer, when they're saying, hey, I need to build out my stack, they go to Mert's, to the Helios website, they use their RPC services. One of the most interesting things they've done on their business model that's been fantastic is, I'm sure you were aware of that period of time in March where there was a lot of congestion on the Solana network, and there was transactions that weren't getting through. And long story short, Helios and others launched validators such that now they can guarantee a certain amount of block space for their customers. And so because Helios is the largest validator on Solana, they can prioritize a large amount of block space for their customers. And so I think you get this flywheel going where you have a lot of stake allocated to you. You build a terrific product. You can therefore get more transactions into the block, and therefore more people stake to you. And so they've really done a terrific job just making sure teams can build effectively on Solana. The other thing they've done is launched some really important technologies like compression. So let's say you want to do an airdrop to 100,000 people. Well, that used to be really expensive to do. And they introduced new types of compression for both, not for tokens as well. So now you can airdrop a token for 100th or 1,000th of the cost of what it used to be. So really, one of the things that led Mike and I to invest in Helios wasn't just that Mert is a exceptional world-class founder. It's that they were focused vertically in building down the Solana stack, all the tools that developers need to be successful.
And this sounds like, to go back to an earlier conversation, this sounds like an equity investment.
It is. Yeah. It's
because this is real equity accrual. This feels like it's a company that could be in public market should it require to do so. It feels like it's like we saw them with the internet as well. These kind of back and middle end companies that run the whole system, the architecture.
100%. Now that said, there could be a world where I could envision decentralizing certain parts of their infrastructure or creating an alternative, another offering that would have some sort of token. So I think with any one of these companies, the product space is massive when you look out over 5 years in terms of what we need to build. And so it's equity right now, and they've, I think, 15x or more revenue since we invested. I mean, it's just been a machine of a company and team. And I think they have a very exciting future ahead of them.
When you're looking at the applications, I know you've been erring towards Solana because it's just friendly for applications layer, right? But you've got other investments. How do you think that through? Do you end up do you have an asset allocation percentage idea? How do you deal with new chains? Because you've got the second risk of, does the chain get adoption plus the application? How do you think through that?
What I'll say, what I'll start with is we're still so early in crypto. I mean, in terms of Polymarket, Polymarket is on Polygon, right? But it's still one of the most popular crypto applications out there. And so I think ultimately we focus on finding teams building killer apps, because we know that if you have the right application and the right on-ramps, it really doesn't matter, right? Or over time you can move if you need to. That said, with that context, I will say that when we've made some investments in the Move ecosystem, which obviously is less mature than that of the Solana ecosystem. And, I'm
also on the board of SWI.
Oh, fantastic. I spent a lot of time with the team out in Singapore. And
that's an amazing thing as well.
Amazing thing, right? And so, but with that, we have to underwrite, if you're building a DeFi product or a consumer app, your initial customers are going to be mostly crypto for the most part, right? It's easy to start with crypto, go to market, and then from there expand to like a broader customer base. And if there's less liquidity on the chain, there is some sort of reduction that we just need to think through, because now it's risk on the team, it's risk on the chain on top. So it does level up. But at the end of the day, if a team is building a terrific product and it's on a less used chain, that won't deter us from investing.
Yeah, and I'll just add that we look at each ecosystem differently. So, for example, we've made 2 Bitcoin investments recently, but we look at Bitcoin as valuable for 2 things: for its block space and security, and sort of Bitcoin as money. So, we did one investment in a stable coin that uses Bitcoin's funding rate to generate its yield, kind of an Athena-like product, all called Open Delta. And then we invested in a company called Rebar that's focused on Bitcoin MEV. So you just basically, but I'm not going to go invest in a consumer app on a Bitcoin L2, because then I'm taking, L2 risk on, I'm taking, L1 risk on, and, where are those consumers coming from? So I'd rather invest in that app on Solana.
Right. So flip up for the most important final question. Your PA weighting. What is it? What is your heaviest weighting? What token? And how do you manage your PA? Because you guys don't run liquid portfolios. So I'm talking about your own stuff. Do you trade? Are you in the trenches? Do you care about the cycles? I want to hear from Mike. You go, and then Carl, you go.
Absolutely. So first, I'll say, this is obviously not financial advice.
Wow.
All of the disclaimers: we're registered investment advisors, and we have a compliance department that gives us rules. So basically, to the question of like, are we on chain to gens? Like, look, yes, the reason we got into investing is because we wanted to participate even more in the things we love. That's how we found Magic Eden, because I was buying horse NFTs for a game called Photo Finish that we also invested in. So that's basically digital horse racing. So we have so much fun. I fractionalized one of my NFTs, which is how I found fractional.art as a product and got to meet their founders and folks associated with them. So we do a lot of that. That being said, as we have kind of institutionalized, we've basically had to ensure that we're really just doing that with play money in most cases, and sort of testing out applications, and that any larger buys or sells that we disclose. But how I am currently sort of allocated in my PA is largely to Bitcoin and Solana, sort of what I call like my barbell thesis, which is one is money. It's Bitcoin. It's globally recognized. It's part of my dad's portfolio as well, my brother's portfolio, and it's just clear that it's broken out as something that is clearly going to sit alongside government-backed money, I think, for the duration of our lives and generations to come. So it's just critically important. And then Solana,
I'm not in the trenches flipping NFTs anymore. That's what you're telling me.
I'm not. I sold most of my NFTs, and I just hold, my PFP, which is a Pudgy Penguin, and a CryptoPunk, and a couple others for fun. But I'm not in the trenches. And then, Solana, I just believe is, basically from sort of a valuation, from a smart contract perspective, a smart contract chain, it's basically the one that we see the most activity across the totality of use cases. So I believe for a smart contract L1 or programmable L1 to be valuable, you actually need a full economy on it. You want people transacting in the native currency, and then also call it, USDC or, a stable coin, but you want them staying there, right? So you need everything from payments to DePIN to DeFi to gaming. And to me, Solana is that, and
Only
one
Sol
chain
and
without
only
the
ETH,
complexity.
the only two Sol and ETH are the only protocols that got even close to that.
That's generally our belief. And I think until chain abstraction happens fully, and we have investments in that area, a company called ZeroDev in the Ethereum ecosystem, we're watching that very closely, trying to help teams with chain abstraction. Because today, when I open my Coinbase wallet, I see eight different versions of Ethereum in my wallet.
Yeah, it's a pain. So, Carl, open your wallet.
As you can imagine, Mike and I think similarly in a lot of ways. So I'd say the barbell is 80% or more of my total PA, with Solana being the heavier weighting of the two. I'm very actively looking at the DePIN space. I think there's some. If I look at the fundamentals, though, on the demand side to our earlier conversation around price, I think there might be some better entry points at future times. But I think DePIN is an area where I'm very interested in deploying capital. Of course, memes. I think memes are incredible.
How does it not become a massive distraction? Because
here's the thing. I used to do a lot more trading, and then since working at Six Man, it's like I can create so much more value by focusing on finding great teams than if I'm sitting there building my own trading algorithms for NFTs and
exactly. The Merts of the world are creating more value than Carl and I sitting around trading.
So, Carl, look, the question is what is your biggest meme holding? I'll give you mine. I actually flipped most of my memes and sold them and bought Sui recently, even though I've got it because I'm already on the board, so I got granted a bunch. But actually, because I just look at the charts on a relative basis, and it's like it's going to outperform WIF and outperform Bulk and everything else. So I'm now down to 2. Doge, because you kind of have to, just in case Elon does something with it. And the other is smoking chicken fish. That is my chosen, because it does that reaction to everybody.
Well, that's a pump.fun coin, so we're delighted.
Yeah.
So to me, it would be, I received, an early airdrop of Bonk. And so to me, I've just held on to a lot of that Bonk over the long term. WIF is another allocation. Mother was a really great pickup, we
talked about her a lot. Yeah.
Right.
Really interesting.
So I think that's done really well.
Did you go to that party?
I did go to that party.
You almost didn't want to admit it then.
I did not.
I was looking at photos like, oh yeah, am I in that photo or am I not in that photo? I think it was a cultural event for crypto. And in fact,
you could call it cultural if you want. It's okay.
It was definitely cultural. But I will say that the caliber of people in that room was insane. Like you look, it wasn't just a bunch of degenerates. It was some of the most important people in crypto that were there vibing together. So I think it was a really terrific event. So I think that's it on the meme coin side. But again,
I really hope, deeply, I really hope she figures this out. Yeah. Because it is attention. It's very hard to keep. But pop stars of all people understand that the game they're in only is attention. So this is the first time we've actually seen somebody try to keep the balloon in the air or the ball in the air, which is how attention works. Because if you step away, it just goes.
Well, I think one of the interesting things with her as well is it's moving beyond attention. So
that's right. The casino she's building.
There's a casino. She has another project in the DePin space, actually. So there's a number of things where now this token will be part of a broader economy. So the way, I think about it is instead of just being a index to her attention, it's an index to her economy that she's building. And if you think about someone like Ryan Reynolds, imagine if in all the businesses that he was involved in over his career, if there was a way you could participate in a token that somehow was used throughout that ecosystem, you would have done extremely well. I think the new type of model for these creators turned, business entrepreneurs.
Yeah. And something Mike, you and I have talked about this for a long time. This is, I think she was Pump.Fun, wasn't she?
I believe so.
Yeah. So she's Pump.Fun, meme coin frenzy, brings it out, creates a larger ecosystem, then builds projects and networks on top. Okay, this is getting interesting. Now, again, most things don't last in this space, but all the experimentation, we're getting closer and closer to what I think is a very big unlock. Taylor Swift's economy is so big that it moved the economy of the United States, the UK, Australia, and Singapore.
Yeah.
Right? Now, if she can tokenize any of that and let her fans participate in the Taylor Swift economy, what is that worth? I don't know, but it's probably a lot more than what she's worth on paper now.
And I think it's a lot more meaningful than, you know, basically Jay-Z buying a Bored Ape 3 years ago, right? So when we actually finally get to, I mean, look, Trump's heading in this direction. I mean, he has a couple of NFT projects himself. He's been hosting. I mean, this past week, he hosted people who bought $25,000 or more worth of his NFTs. He's done that a couple times now. I don't see how you can watch that happen as somebody who's prominent and has attention and not say, you know, that might be interesting for me to do. And shockingly, he's delivered, you know, more value than 90 to 95% of the people who have launched these NFT projects.
Brilliant. Listen, guys, fabulous conversation, really wide-ranging, super interesting, and I really appreciate your time, and good luck out there.
Thank you, sir.
Thanks.
So look, I think it's fascinating to speak to guys like this because we really do get insights. You know, why they think Solana is so good and why they've been looking at certain parts of the ecosystem to invest their capital. You see, eventually, for those of us who trade in secondary markets, I don't do VC. So when I trade in secondary markets, I know where the strong narratives are, what the good projects are. Doesn't mean price always plays accordingly. You know, because of this mismatch between supply and demand of new tokens, you often get a correction in price first, but maybe that's a big opportunity. That's how I'm starting to see it. That supply-demand mismatch is actually something for us guys, the retail investors who don't do the VC deals. So anyway, I think it's really useful. And again, the point being with this is we've all got to listen to other people's ideas. And that's what Real Vision is all about. And if you haven't joined Real Vision yet, I don't know what you're doing here watching this on this platform. You see, on Real Vision, you can watch these interviews with full AI summaries, the full transcripts, the ability to look at the trade ideas, network amongst people around the world, join our meetups, join our live events, and all of the other incredible value that we have on the Real Vision platform. We've even got our own AI to help you understand the terms or the videos themselves. Anyway, see you at Real Vision. And again, if you guys are on Real Vision watching this, then it's time to level up to Plus and get your ideas heard by the crowd.
If crypto is digital gold, then gold must be analog crypto. As you build your digital portfolio, don't leave your analog portfolio behind. Gold is a timeless asset that offers unique diversification, but there's a better way to own gold than paying storage and management fees. With monetary metals, you can own gold and earn a yield on it paid in more ounces of physical gold. And it's all vaulted and insured on your behalf for free. Their Gold Yield Marketplace platform connects you with opportunities to lease or lend your metal to expertly vetted companies. You choose which opportunities you want to participate in, then sit back and watch your ounces grow every month. The question isn't crypto or gold. The question is how to maximize the value of your assets so you can be better prepared for the future. Earn 2 to 5% on gold, or if you're an accredited investor, you can earn 12% on silver in their latest offer. Go to realvision.com/metals.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.